Hi, this is CA Firoz. Today we are going to discuss three countries taxation. Here we are going to discuss regarding USA taxation, UAE taxation and India taxation. So here we will take the understanding of basic sell tax, corporate tax, income tax and capital gain. Via example we will understand in simplified manner. First of all, here we can see at a glance what the differences in these three countries. First of all, for your understanding, we will take the personal income tax. As you know, the personal income tax in USA, there is a 10% to 37% progressive slab rate method. As like in India is also there is a progressive slab rate method 0% to 30% regarding the personal income tax. For your understanding, what is the personal income tax? Personal income tax, if you are individual and earning any income like salary and other income, that time it is considered as personal income and it will be considered the tax which is applicable on this type of personal income is called personal income tax. In UAE there is no any personal income tax. If in UAE you are earning some salary, that time there will be no any tax applicable on you. I hope it is clear. And further regarding the basic exemption, as you know that in India there is a basic exemption is rupees 400,000. That is basic exemption limit. Beyond that you have to pay tax. But be remember there is a rebate concept up to 12 lakh. There is a no tax. If you are salaried person, there is a extra standardization that is 75,000. Means total tax-free income for you. This if you are earning salary that is 12 lakh 75,000 in rupees terms. In UAE there is a no any tax means full amount whatever you earn the salary that is a tax free. Regarding USA, there is a standard deduction, and apart from this, there is additional deduction for the if you are senior citizen or you are blind person. That time there is a additional deduction is also applicable. But here we will consider is normal sense. For your understanding, what is the standard deduction? That is dollar 16,100. Beyond that, you have to pay tax according to the slab rate. I hope it is clear. Further, we will discuss here corporate tax. Corporate tax, if in UAE, corporate tax is a 9% above AD 375,000 profit. I hope it is clear. If you earn profit and your profit is beyond 375,000, that time you have to pay tax at the rate of 9% over and above 375,000 profit. And further regarding in USA, if you are in USA and you are registered as C Corp, that time you have to pay flat 21% corporate tax. In India, as you know that there is a 25% and 30%. This is vary according the type of company. If you are a small company means your turnover is not beyond the 400 crore in 2023 and 24 financial year. That time you have to pay 25%. For your understanding, you can consider if you are a small company, that time you have to pay 25%. If you are big company, that time you have to pay 30%. In other condition is also applicable. If you are there is a rate of 15% and 22%, that is subject to certain condition. For your understanding, in USA there is 21% corporate tax. In UAE there is a 9% corporate tax, but above AD is 375,000 profit. In India, there is a small company, there is a 25%, and if there is a big company, that time 30% tax rate will be applicable on you. Further, there is a other tax rate like 15% and 22% that is related to subject some condition. Regarding indirect tax, what is the indirect tax? You can understand that is sell tax. In some country that is called VAT, in some country that is called GST. In USA, there is a state by state, there is a different sale tax rate. That is rate is 0% to 10%. But in UAE, there is a state forward 5% standard VAT tax rate that will be applicable on all Emirates. There is a 7 Emirate that you can consider as like state. In all states, same rate 5% VAT applicable on all entity. Regarding India, India is a, also they are considering central level. There is a tax is different from different type of product. There is a 5% rate also there, 12%, 18%, and 28%. This is depend on the your product. Regarding corporate tax gain, corporate capital gain tax. Capital gain tax in USA there is 0%, 15%, or 20%. In UAE, there is 0%, means in UAE there is a no any capital gain tax. But in India, there is a capital gain tax is also applicable. There is a flat rate. If you are earning long-term capital gain, that is 12.5%. If you are generating short-term capital gain, that is a 20% flat rate. Further, we will discuss here regarding tax residency basis. If you are USA resident or citizen, that time whatever you earned income in any country, that time you have to pay tax in USA. In UAE is a limited area. UAE source income you have to pay tax in UAE. In India, if you are resident, that time whole world income, whatever the income you earn any countries, that time you have to pay tax on that. This is crux point. This is all in bird eye view. You can understand what the differences in the personal income tax, basic exemption, corporate tax, indirect tax, capital gain tax, and tax agency basis. We will understand here all type of the differences in three countries. Further, we will go deep diving into this regarding personal income tax. Personal income tax in USA, what the slab? If you are single filer, first of all, we have to understand what is the single filer. Single filer means if you are individual, and earning income, that time you are considering as single filer. If you are married person and both income will be club and you want to file together, that time it will cover and married person. That time this whatever the tax bracket that will be just double. And thirdly, there is also head of house. If you are head of house, there is a different tax bracket is there. But here we will, for your understanding, we will take very simple example here for the single filer. For the single filer, there is a 0%, $0 to dollar 12,400. There is a 10%. Similar like that, 12,401 to 50,400. There is 12%. There is a each bracket you have to pay different tax rate. As like in India, there is also, you can understand, up to 4 lakh, means if you are following new tax regime, and up to 4 lakh there is a no any tax. And beyond the 4 lakh to 8 lakh there is a 5%, 8 lakh to 12 lakh there is a 10%, 12 to 16 there is a 15%, and 16 lakh to 20 lakh there is 20%, and 20 lakh to 24 lakh there is 25%, and 20 above that 24 lakh there is a 30%. This is criteria of tax slab. I hope it is clear in India and USA. But here we are not going to discuss in UAE part, because you know that in UAE there is a no any personal income tax. Whatever you earn the income as like salary, there is a no any tax. I hope it is clear. Further, for your understanding, we will take example. If you are in USA and you are single filer and earning $66,500, then you have to pay whatever what amount as a tax, 6,040 in federal tax after deducting $16,100. This is a standard deduction. If you are single filer, you can take the benefit of this 16,100. And if you are a married person or you are head of family, head of house, that time there is a different standard deduction. Here we will understand for just single filer. If you are single filer and your earning is $66,500, then you, after deducting 16,100, you have to pay tax $6,040. How to drive it? You can see here in the first slide. You can see here up to 12,400 there is a tax is 1,240. and beyond that up to 50,400 means after deducting standard deduction, your income will be, in my example, $50,400. So you can add this both, means uh, 1,240 and 4,800. So adding this means it resulted in 6,040. I hope it is clear. And similar like that, if you in UAE, you know that there is will be no any tax, means whatever you are earning up to similar, right? If there is a dollar 66,500, if you are converted through the 3.6725 rate, that time it become 8244,221, means there is a tax free income. There will be no any tax you have to pay. In India, similar like that, you have to convert at the rate of 95, means your income will be 63 lakhs 17,500. Then you have to pay tax. What the pay tax? 14,000. Sorry, you have to pay tax 40 lakhs 75,250. How to calculate this? Come to my slide. Up to, you can see that up to 25 lakh, 20,000, 40,000, 60,000, 80,000, and adding 1 lakh, that will be equal to the 3 lakh, means up to 24 lakh income you have to pay tax 3 lakh, and beyond that straightforward you have to calculate 30%. Now you can see here, up to 24 lakh there is a 3 lakh tax, and beyond that straightforward 30%, that will be, what will be, tax 11 lakh 75,250, means whatever equal to in dollar you have to pay 15,529. So there is a comparative chart you can see here. If same income, you have to pay tax in USA dollar 6,040. In India, you have to pay tax dollar 15,529. But in India, there is a no any state income tax. But in USA, you have to pay also state income tax. Maybe whatever state you are involving, that you have to pay extra. In UAE, straightforward, there is a no any tax. So I hope it is clear through this simple example. Further, here we will discuss regarding the corporate tax. As you know that in corporate tax, in USA, if you are C corp, that time you have to pay tax flat 21%. Suppose that if your company earns dollar 1 million as a profit, so in USA you have to pay at the rate of 21%, that will be equal to dollar 210,000. For UAE, beyond 375,000 AD, you have to pay tax at the rate of 9%. So for your understanding, 375,000 AD is equal to 100 to 102,110. So after deducting this, whatever income is coming, then you have to charge at the rate of 9%. Means you have to pay tax dollar 80,810. In India, you have to pay straightforward. Whatever is small company, that time you have to pay 25%. If you are big company, you have to pay tax $300,000. Means you can see here. So USA, you have to pay same income as a company, you have to pay tax 210,000. Same income in UAE, you have to pay dollar 80,810. Same company in India, you have to pay tax 250,000 or 300,000 dollar. I hope this is very simple example for your understanding. You can see the tax scenario and tax structure in USA, UAE, in India. So we already covered personal income tax, corporate tax. Further, we are going to discuss here indirect tax. For your understanding, indirect tax, state wise state is differ in USA. In UAE, straightforward standard rate is 5%. In India, GST rate 5% to 28%. But you know that what the mandatory limit for the cell tax registration. In USA, there is threshold dollar 100,000 or 200 transaction. In some states, they are strictly follow the dollar 100,000. There is a immaterial 200 transaction. So, for your understanding, you have to see regarding the state. So, regarding the state, you can consider if your turnover dollar 100,000 at that time, beyond dollar 100,000, that time you have to take the registration in USA. In UAE, if you are crossing 375,000 AD, that time you need to take the registration as like VAT. If you are not taking the registration within time, there is a heavy penalty in UAE, USA, in India also. In India, we are discussing threshold for the registration. If your turnover is more than 40 lakh, that time you have to take registration under GST. If you are service provider, that time this threshold will be 20 lakh. So for your understanding, in USA, cell tax in Wyoming 4%, Delaware 0%, Florida 6%, California 7.25%. As we discussed, there is a 0% to 10% cell tax in USA. State by state, there is a different cell tax. In UAE, state forward 5%. In India, state forward 5% to 28%, but it is depend on the product. I hope it is very clear in direct text. Further, we will discuss here regarding the capital gain. This is also we will understand via example. Suppose that if you sell the stock for uh, and you earn the profit dollar 50,000. If you earn dollar 50,000 and held over than 1 year, means this is long term capital gain, you can understand. If long term capital gain is 50,000 dollar, so in USA you have to pay tax at the rate of 15%. What will be the tax will be dollar 7,500. In UAE, there is a no any capital gain tax, so means that is $0 you have to pay in UAE. In India, there is a long-term capital gain tax rate is at the rate 12.5%. So at the rate of 12.5%, and we already converted via the Indian rupee at the rate of 95 rupees per dollar. So why we need to convert dollar into rupee? Because you know that in India there is a exemption of long-term capital gain up to rupees 1,25,000. We have to straightforward calculate long-term capital gain in India 12.5%. Whatever gain, but you have to take the exemption of 1.25 lakh, then you have to pay tax dollar 4,934. So I hope it is clear. If you are in USA, same profit dollar 15,000, you have to pay tax. What the pay tax? Dollar 7,500. In UAE, you have to pay tax zero. In India, you have to pay tax for the long-term capital gain 4,934. This is very simple example. You can see that this is very easy for understanding. Further, we will discuss here regarding the tax residency. For your understanding, if you are USA taxation citizen and green card holder on worldwide income, what the means is, if you are USA citizen or green card holder, you have to pay tax whatever the country. If you are earning income in Dubai, in India, you have to pay tax according to USA law. But if there is a double tax treaty agreement, that time there is some benefit you can take. In UAE, if you are resident in UAE, that time there is you have to pay tax only UAE source income. If in India you are resident as like a USA, If in USA you are resident, you have to pay tax whole world income. Similar like that, if in India you are resident, you have to pay tax whole world income. Whatever income you earn in any country that is immaterial, you have to pay tax in India. All income, whether Dubai income, USA income, UK income, whatever income you earn, and whether in which country you earn, you have to pay tax in India. This is very clear to understand. I hope all aspect, important aspect already cover here. If you need any clarification, you can comment here. We will consider that. Thank you very much.